Tesla stock is down in the pre-market before the Monday bell. For the week, Tesla is up over 2%, adding to the monthly gains, which sit at about 11.5%. If we're going back an entire calendar year, Tesla is up almost 40%. I have two option contracts that are due to expire at the end of the week. One I fully intend to exercise, and one I can sell that could net me, hopefully, some decent gains. Short term, there is no telling which direction Tesla stock may go, but in that long-term thesis, of all the automotive companies around the world, Tesla is in the best position not only to grow, but to maximize their profits from each vehicle sold. Add on to their prowess and innovation in battery technology, energy storage products, and artificial intelligence, there's no telling where Tesla stock could be in the next 5 years. Tesla's Swedish union woes compound. LUCID booted off NASDAQ 100. NIO gains on spinoff rumors and more. Biggest EV stories of the week. Electric vehicle stocks had a mixed close in the week that ended on December 8th, despite the broader market strength. With mid-cap startups losing ground, market leader Tesla, while up for the week, has largely been range-bound since it reported its third quarter results in mid-October. Ladies and gentlemen, that third quarter was mildly disappointing, not only for Tesla bulls and fanboys, but for the financial analysts of Wall Street. Tesla lowered their production to retool their factories. They've got a lot of things on the horizon, but on the surface, especially with other auto manufacturers saying that there is a slowdown in EVs, nobody's buying these things, they're sitting on the lots. Even Tesla has dropped production in Q3. But if you go beyond skin deep of it all, you'll understand that the ease of Tesla's production was planned, actually announced on their Q2 earnings call. Even then, financial analysts were flipping the out. Me personally, I was hoping that the stock would dip below 200 again so I could go bananas on purchasing stock. But alas, that did not occur. It got pretty close. But after Tesla releases those Q4 numbers, yeah, that EVs in reverse narrative, that's going out the window, folks. Here are the key events that happened in the EV space during the week. A labor union strike has precipitated into a crisis for Tesla. A company representative in Sweden told a local media outlet that the situation is sensitive and that the security of the employees is the company's top priority. Employees reportedly were receiving threats on social media. The week also saw Tesla losing a court case in Sweden against the nation's postal service over the latter's refusal to deliver license plates to the company's Swedish arm. Danish pension fund Pension Denmark announced this week that it plans to include Tesla in its exclusion list. A Reuters report said the decision to divest Tesla was due to the EV maker's refusal to enter into collective bargaining agreements with labor unions. Labor unions in Norway and Denmark said they would start blocking transit shipments of Tesla meant for the Swedish market. Needless to say, it's a nasty situation over there in Sweden. Tesla losing that court case is only going to encourage more dysfunction in that region. At some point, you've got to believe that this is going to be more trouble than it's worth. Question is, does Tesla capitulate, giving in to the demands of these unions? Or does Tesla take their football and go home? With what little I know of Elon Musk, anything's possible. Data released by the China Passenger Car Association showed that Tesla's made-in-China sales totaled 82,432 units in November. This marked a 17.8% drop from a year ago. On a month-over-month basis, sales rose 14.3%. Domestic sales came in at 65,504 units, a 4.8% year-over-year increase, and a 129% month-over-month jump. The performance is in line with Tesla's typical focus on domestic sales on the second half of the quarter. I always find it interesting that they always mention that when the sales are high, but when you get those low numbers in the beginning of the quarter, there's no mention anywhere in sight that Tesla's major export hub is Shanghai, and a lot of those sales are not going to be domestic. Lucid's mixed week. With fundamental woes weighing down on Lucid, the company sprung into action this week. It announced that it would streamline its Lucid Air lineup. The number of Air sedan models was trimmed from 5 to 4. and the all-wheel drive version of the Pure variant was scrapped. The company has lowered starting prices to make the EVs more affordable. Lucid's prices are going to have to drop. And that's just in direct comparison to what Tesla's offering. Their vehicles are cheaper and better in a lot of ways. Now, let's not forget that Lucid is losing money on every vehicle that they sell. To combat that, you're going to have to reduce complexity wherever you can. Good sign from Lucid that they're scrapping some of these versions, lowering the prices to increase the demand for their vehicles. The Lucid Air is a beautiful creature, but no one is going to pay twice as much for a Lucid Air when they can purchase the Model S Plaid for cheaper. Friday, NASDAQ announced that Lucid would be removed from the NASDAQ 100 index, effective prior to the market opening on December 18th. NIO set to spin off battery unit. Chinese EV startup NIO is mulling a spin-off of its battery manufacturing unit as part of an effort to turn profitable. The spin-off will reportedly happen as early as the end of 2023. Rivian wields the axe. Efficiency seems to be the mantra of startups that are striving to survive the inclement economic environment. And Rivian proved to be no exception. The company laid off about 20 members from its long-range battery cell development division, including the lead cell engineer. The company confirmed that the layoff impacted less than 8% of its total workforce. While we place a very high value on the cell engineering competence we have built at Rivian, we're focusing the team on R2 and its defined programs. Much like the Model 3, Rivian's R2 is designed to get Rivian profitable. Achieving economies of scale and reaching volumes that print you money, that's the type of that'll propel you from where the legacy automotive market caps are into where Tesla's at. FISKER drives into India. As Tesla struggles to get its operations going in India, a report noted that FISKER's Ocean SUV was spotted in the country. In another development, following a slump in the company's stock price, founder Henrik Fisker released a statement this week to assuage investors' concerns. I believe the negative reports about the company have been overblown. We have made considerable progress on our business plan and achieved many firsts in the industry, including launching in 11 countries. I believe the current share price does not reflect our accomplishments and our long-term opportunities. The only thing I truly care about are your production numbers. Can you reach a level of production that allows you to benefit from economies of scale, possibly making your EVs cheaper so you can open up the total addressable market? None of that matters if you can't scale up production. And much like Lucid, you have proven that time and time again, production's not as easy as Tesla makes it look. In conclusion, something's gonna have to give over there in Sweden. It's a damn shame that some of the employees over there at Tesla are receiving threats via social media. As the impact of this nonsense continues to spread, you have to wonder if the juice is worth the squeeze. If it looks like a duck and it quacks like a duck, well, that's probably a duck, and more than likely isn't going anywhere anytime soon. Both Lucid and Fisker are failing to ramp up their production, and it's impacting them negatively. While Rivian is getting lean and mean to bring its R2 platform to life, don't be surprised when NIO spins off its battery division. Any and everything you've got to do to turn profitable. That's all I have for you today. Be easy. Peace.